What's good everyone, welcome back to another video on the YouTube channel, and as you guys can tell by the title, this video is going to cover macros and how you can trade without daily bias. So within these macros there is a short set of time that the algorithm will look to move the market. It will either go to a drawn liquidity, so it could be a small liquidity pool that you can target, and they usually last for around 10 minutes or some of them can be more. Macro is just a short set of instructions that the algorithm will follow at a certain time of day. Before we get into that, I want to go over IPDA. So IPDA is the interbank price delivery algorithm. So we will go over the 4 functions that it can do. So the algorithm can consolidate, expand, reverse, and retrace. So it doesn't always need to be in this order. However, keep in mind that if we have a consolidation into a reversal, your mind should automatically be thinking power of 3. Why is this? It's because the power of 3 is accumulation, manipulation, and distribution. Consolidation, this is actually the accumulation, so we'll label this A. And then the reversal, that is the M, which is the manipulation. And then we have the distribution, which is the expansion. So if the algorithm ever does this, a consolidation into a reversal, your mind should be drawn to the power of 3. I'm going over the IPDA basics because this will be helpful for when you are trading the macros. So you will look at the previous ranges and then you'll mark out the time that we expect the price action to move. And within that time window, we will be looking at the functions of IPDA. So if we see a consolidation, we would expect an expansion or a reversal, because we can then look at either if it's an expansion, we can look for a retracement, then we can continue on. Or if we have a consolidation into a reversal, we will look for a power of 3. That was the basics of IPDA. If you guys have watched my bootcamp, I do go over this in a bit more detail, and I will plan on making some more videos on this topic inside of my Telegram group. So it's completely free, and there's a link to that in the comments down below as well. Getting the foundations out of the way, let's look at the macro times and how you guys can utilize them. Okay, so this was a post that I made on Twitter for everyone to look at the kill zone times, the macro times, and the silver bullet times. Okay, so the timing of the silver bullet is right here. I say the silver bullet with quotes because if you guys have followed me for a while, you know what the real silver bullet actually is, but we'll leave that out of the way. So this is the silver bullet timing, but we are only going to focus on the macro timings. So you guys can see that there's plenty of different timings right here. We have 9 time windows that we can focus on. And if you guys are focusing on every single one of these time windows, you are more exposed to the market and you're more exposed to lose it. I would recommend just focusing on a 1 time window in London, then a New York, and then the PM. Within this, you can narrow it down to just one that is profitable for you, and you can just focus on that time window. I'm going to go over 3 examples for you guys. So we're going to go over the 2:33 to 3 AM London macro, then we will go over the 9:50 to 10:10 macro, and then we will go over the 11:50 to 12:10 macro New York PM session. But as I spoke about the consolidation into an expansion or a consolidation into a reversal, that is the foundation of knowing what the market is going to do, because you'll be looking at the previous range from 11:50 to 12:10. So whatever happened before this time window, you're utilizing that to your advantage when price action is printing inside of this time window. Other than that, let's look at the first macro time. Okay, so the first macro time that I'm going to go over is 2:33 to 3 AM. Within this time window, you want to enter a trade. So from 2:33 to 3 AM, this is where you'll look for an entry. And you can only enter if you have a clear drawn liquidity. So you guys can see that we have this consolidation right here. So this is a market maker buy model, and we are expecting an expansion into here, as we've taken out the sell side liquidity below these lows. And then what else did we have? We had a consolidation right here into a reversal. So what are we thinking? We are looking for a expansion, because this should be the distribution, because we had the consolidation, which was the accumulation. Then we had the reversal, which was the manipulation. Now we should have the distribution into these highs. Let this price action print, and you can see that we have this fair value gap that we could have entered from. So when price reaches back into there, we can re-enter, or we can look for an entry inside of here. So all you do now is just place a buy limit with a stop loss below this low, because that's our intermediate term low, and then we will target a 1 to 2, and we'll just see if we get tagged in. So we get tagged into the position, we still have the buy side liquidity resting above there, and you can see price reaches into our buy side liquidity draw. From 2:33 to 3 AM, this is where we came into a fair value gap and it gave us an entry, and you will target the buy side liquidity. Let's go over the New York session macro. We're going to go over the 950 to 1010 macro. You guys can see that we have sell side liquidity below this low that we've not taken, and we've made equal lows, and we have this consolidation. So this is already a market maker sell model, so we have a bearish bias. We've situated that out, and you can see that we've taken out buy side liquidity right here, and we are looking to target this low and the sell side liquidity below the consolidation. So now we will look for an entry within 950 to 1010. Okay, so this is the time window between 950 to 1010, and you guys can see that we have sell side liquidity below this low too, and we took out the buy side liquidity above here. What did we have? We had a consolidation into a reversal, and then we completed the fractal power of 3. Now we've completed that, we can look for selling opportunities. So let's see what is given inside of here. So we make this fair value gap right here. This can be an entry for us to target the sell side liquidity. We will sell short with our stop loss above this high, and then we will target the sell side liquidity. So let's see how this plays out. So we get tagged in right there, and price reaches into the sell side liquidity pool. And you guys can see it's from 950 to 1010. You can see that was just 2 macros that I went over. There's 9 macros, and you guys just need to find the ones that you like and resonate with you. I'm going over the ones that I do look at inside of price action, which were the 2:33 to 3 AM, then the 950 to 10 AM, and then the 950 to 1010. And you guys can see that I offered a beautiful trade right here. And now I'm going to go over the New York PM macro, which is 1150 to 1210. Yep. Okay, here I have an example of the New York PM session macro. So it's from 1150 to 1210. It's similar to the AM session macro that I went over with you guys. So you can see that this is where we took the sell side liquidity, and then we traded into a premium gap right here, and then we traded away. So now we will be looking for a continuation to the downside, and whatever is offered inside of this range, that's what we will look to trade. This fair value gap right here. So we can look to enter inside of here, and then we can have a stop loss above this candle's high, and we can target the sell side liquidity. So we are aiming for a 1 to 2, and let's see how this plays out. So you can see that we consolidated around the macro time. However, it did give us an entry, and that's where we sold. And you can see that we trade into the sell side liquidity. So we trade into it 10 minutes later on, but you can see how great it is to look at the macro timing for entering inside of the market. If you guys have any questions or want me to make another video going over this topic, make sure to leave a comment down below and I'll get right back to you. And whatever I explain inside of this video, I will be making it into a flowchart, and it will be uploaded on my Twitter page. If you guys found this video useful, as always, thanks for watching.